They told you silver crashed on Monday because of market forces. They lied. Silver crashed because the Federal Reserve just secretly printed billions of dollars to bail out a banking system that is mathematically insolvent. If you bought silver at $83 and watched it collapse to $71, you didn't lose money to bad luck. You lost it to a rigged algorithm designed to turn your panic into their liquidity. This is the shadow ledger. We do not predict, we prove. And today, we are exposing the heist. As of this morning, we are witnessing a violation of economic law. The Shanghai Futures Exchange is trading silver at a converted price of roughly $80 per ounce. But look at the Western spot price, the red line hovering at $71. That is a spread of $9. In a free market, arbitrage traders would close that gap in seconds. They would buy in New York and sell in Shanghai, making billions risk-free. But they aren't. Why? Because the arbitrage is dead. The physical metal is trapped behind the Great Wall, and the West is left trading paper ghosts. China officially banned the export of silver as of January 1st. This is not a negotiation. This is a liquidation event. We have confirmed signals that the industrial lockout has begun. The major players, Samsung, Tesla, the solar conglomerates, they aren't looking at the price anymore. They are looking at survival. When the ban went active at midnight, tons of silver were pulled from the Shanghai vaults in a 48-hour vacuum operation. You have to understand the panic inside a boardroom right now. Just-in-time delivery has become not in time. If Tesla cannot secure silver for their contacts, they cannot build cars. If Samsung cannot secure silver for their circuitry, they cannot build phones. So they are front-running the ban. They are paying $80. They are paying $90. They don't care about the premium. They care about possession. Yet the mainstream analysts, the ones telling you to buy the dip, they are missing the point. They are all pointing their cameras at Beijing. They are screaming that China is squeezing the West. They are wrong. China is not the cause of this crash. China is the reaction. China is the smoke. We are about to show you the fire. What happened in China was strategic, but what happened in the United States over the last 48 hours, while you were distracted by the price drop, was catastrophic. We have uncovered the ledger the banks tried to bury. Everyone is looking east at the export ban. We need you to look at the Federal Reserve, because the system didn't break this morning. It broke days ago.
This is where the story changes. This is the pivot that the news anchors won't touch because they don't understand the mechanics. To understand why silver is vanishing, you have to understand the repo market. Simply put, the repo market is the pawn shop for the biggest banks in the world. It is the plumbing of the entire financial system. When a bank runs out of cash overnight, when they are insolvent for a few hours, they go to the Federal Reserve. They hand over their treasuries as collateral, and the Fed gives them cash to survive until the sun comes up. For the last 3 years, this market was a flat line. It was dead. Look at the data from the St. Louis Fed. From 2022 through 2025, the banks told us they were healthy. The chart was 0. But look at the end of December. Look at the year-end spike. On the quietest trading days of the year, the standing repo facility and overnight repurchase agreements chart went vertical. We are seeing a massive surge in liquidity demands, hovering between $26 and $30 billion during the final days of the year. The media calls this year-end turn funding. They call it standard operating procedure. Do not listen to them. A healthy banking system does not need $30 billion of emergency taxpayer-backed loans just to close its books for the year. This is not plumbing. This is a leak. Why did the banking system suddenly need a bailout the size of a small country's GDP just to stay alive over the holidays? The answer lies in the derivatives market. The chart data tells us the story the banks won't admit. We know from exchange volume that throughout December there was a massive spike in demands for physical metal. The hedge funds saw the China ban coming and they hit the deliver button. They demanded millions of ounces of physical metal. And the banks? They were naked short. They didn't have the silver. They only had paper contracts. So they had a choice: default publicly, admit they are frauds, and crash the global economy, or print the difference. That $30 billion liquidity surge wasn't a standard operation. That was a settlement bribe. The banks ran to the Fed, borrowed emergency cash, and used it to settle these contracts in fiat currency because they could not settle them in metal. They bought their lives for another 24 hours using your future inflation as the payment method. This is exactly what happened in September 2019, 4 months before the entire economy collapsed. The repo market spiked, the Fed printed, and the system broke. We are seeing the exact same signal again. The media tells you silver dropped to $71 because of market forces. No, it dropped because the banks used that newly printed liquidity to flood the paper market and suppress the price, hoping you would sell. It is a fake out. The banks are out of cash, the vaults are out of silver, and the Federal Reserve just printed the evidence for the whole world to see.
Connect the dots. China didn't ban silver exports to annoy the United States. They didn't do it for leverage. They did it because they saw this repo spike coming. China's intelligence knows the Western banking system is mathematically insolvent. They know the COMEX is trading phantom ounces, selling the same bar of silver to 5 different people. So China made a decision. They refused to trade their real physical silver, the conductor of the future economy, the metal needed for every missile, chip, and solar panel, for US dollars that are being printed by the billion just to bail out a broken casino. They closed the exit. They performed a margin call on the United States of America. We have seen this movie before. In 1980, the Hunt brothers tried to corner the silver market. The price went vertical. The banks panicked. They changed the rules, raised margin requirements, and crashed the price to save the dollar. Today, the players have changed, but the game is the same. The banks are changing the rules again. They are using the Fed's printer to suppress the price. But this time, they aren't fighting 2 brothers from Texas. They are fighting the manufacturing base of Asia, and they are going to lose. Let's look at the projections for tomorrow. When the markets fully reopen on January 2nd, the algorithm is going to try to close this gap. The paper market at $71 is going to try to teleport to the physical reality of $80. We are going to see a gap up of historic proportions. But here is the warning. Do not look at the price and think you are rich. If you are holding paper silver, SLV, futures contracts, unallocated pool accounts, you are the yield. You are the liquidity they will drain. When the force majeure notices go out, they will settle your contract in cash. They will give you your worthless dollars back. But if you hold physical, if you are your own bank, you have crossed the bridge. The window is closing. Actually, looking at the premiums, the window is already smashed.
You have two choices in this new reality. You can trust the system that needed $30 billion of emergency life support on New Year's Eve just to open its doors, or you can trust the metal that has outlived every empire in human history. The China ban was the signal, the repo spike was the proof, the Silvergeddon is the result. Do not wait for the news to tell you. By the time they admit, the Add to Cart button will be grayed out. We have exposed the shadow ledger. The banks are naked, the vaults are draining, and the printer is running hot. If you want to see the signals before the rest of the world wakes up, stay tuned to this channel. We are watching the failure. This is the shadow ledger.